Hello, investors. Something interesting is happening in the market right now. For the past years, AI stocks were the darlings. Everyone wanted exposure. But lately, money has been quietly moving out of high flying AI names and into heavy asset stocks. Why? Stability. And when investors start looking for stability, that usually tells us something about sentiment. Okay, guys, let's be honest. AI stocks had an incredible run because when we look at Nvidia, on the daily time frame or maybe on the weekly time frame, we see a beautiful uptrend overall because we have 3 years of AI boom since 2022 until now. So when we also look at Microsoft, everything is clear, a beautiful uptrend. So companies like Nvidia, Microsoft, and others tied to the AI boom saw a massive inflows. The narrative was powerful. Artificial intelligence, cloud computing, explosive growth. And when growth is strong, investors are willing to pay high prices. But high prices also mean high expectation. Now, let's talk about something else. Let's talk about the other side. Heavy asset stocks. For example, when we come here on the daily time frame and we choose one of the heavy asset stocks I want to emphasize today, Caterpillar. What we see here is this, a beautiful uptrend, very beautiful. These companies that own physical infrastructure are made of machinery, energy facilities, industrial plants, transportation networks. Of course, they're not flashy, but they generate steady cash flow. And when uncertainty increases, investors start valuing predictability. Now, let's see the S&P 500. On the daily time frame, we have this beautiful picture here. Stock is actually growing here, but recently we have been on a consolidation zone. So our question is this, what is actually driving this shift? I would say a few things. First, valuation in AI became stretched. Secondly, the macro uncertainty is creeping back in. And thirdly, when market get nervous, you already know they rotate. Not necessarily out of fear, but out of risk management. Because we can see here the price is actually touching the 100 moving average. Institutional decision because we can also see the same action repeating here, here, and also here. Consolidation zone. So when you have made strong gains in growth stocks, sometimes you lock in profits and move into something steadier. Now, let's go back to the Nasdaq. Actually, we can see here Nasdaq is different, even though we have a consolidation. Based on our story, this doesn't mean that AI is dead, of course not. It doesn't mean tech is collapsing. It means leadership might be changing temporarily. Markets move in cycle. Growth leads, then value leads, then growth come back. This is actually the cycle. This is called rotation, not panic. So investors, when we look back again at the Caterpillar, stability in this environment means strong balance sheets, real assets, consistent dividends, predictable demand. Heavy asset companies often benefit from long-term contracts and infrastructure spending that creates confidence. And confidence is attractive when volatility rises. Now, when we try to compare these two charts, I'm talking about Caterpillar here and also the Nasdaq. Let's put them side by side. The bigger question here is this: is this a short-term defensive move or the beginning of a longer shift? If earnings in AI stay strong, this is what we have to know. Money could rotate back quickly. But if growth slows even slightly, valuation pressure increases. And that is when capital flows matter. So investors, sometimes we may talk about something, but we also have to know where to watch and how to watch it. Because we have this level here, which is actually very crucial. Even though here, the price have been moving on top of the 20 moving average on the daily. So we expect the price to come back to this level and hit a continuation. This is what we want to see based on history. Here, the same thing happened here. After a big drawdown here, the price came back to this 200 moving average on April. And since then, it has been going up. Now it's consolidating and it creates some kind of fear. So if the price come back to this level, touching the 100 moving average or the 200 moving average, we expect the price to continue to go higher. So relative strength between tech and industrials can create some kind of visuals, the bond yields, the earning guidance from AI major companies, because numbers, not headlines, decide the next move. Numbers, not headlines. But in general, what we always forget is this: market don't move in straight lines. Of course, fears appear, uncertainties, capex, everything, but market don't move in straight lines. They shift, they rotate, they rebalance. And right now, investors are searching for stability, but the story is not over. It's not over because it's evolving. And the investor who understands rotation are usually the ones who stay ahead. Thank you for watching this video with me, guys. See you next time. Have a nice day.